5.1% on up to $250,000, with just one condition to meet. That's the best ongoing savings rate in Australia right now, and most people haven't even heard of the bank offering it. We've compared every high-interest savings account in the country to find the 5 that are actually worth your time in 2026. Before we get into the accounts, you need to understand where rates sit right now and why this matters. The RBA raised the cash rate to 3.85% back in February, the first hike since 2023. Inflation picked back up in the second half of last year, and CBA's economists are forecasting another increase in May that could push the cash rate to 4.1%. So savings rates are high, and they might go higher. But here's the thing, a high headline rate means nothing if you can't actually earn it. And the data on that is genuinely shocking. The ACCC ran a major inquiry into savings accounts and found that on average 71% of bonus interest accounts did not receive bonus interest in any given month. Let's start with the account that on paper has the highest ongoing rate for most people. Judo Bank launched a personal savings account in late February, and it's paying 5.1% on balances up to $250,000. Now, Judo Bank is primarily known as a business lender and term deposit provider, so a savings account is new territory for them. But here's what makes it stand out. There's only one condition to earn the bonus rate. Deposit $300 or more into your savings account each calendar month. That's it. No balance growth requirement, no card purchases on a linked account. And critically, no penalty for making withdrawals. Judo themselves say they don't penalize you for making withdrawals and that you can move money out for emergencies without losing eligibility. For anyone who's been burned by forgetting a condition on another account, this simplicity is the whole point. The balance cap is generous too. The full 5.1% applies to the first $250,000, and even above that you still get 4.55% up to $2 million. There are a couple of things to know though. This is a digital-only bank with no linked transaction account, so it's a pure savings vehicle. There's no card, no bill pay. Transfers in and out go through standard bank transfers, so don't expect instant OSCO or Pay ID access. And there's a minimum balance of $1,000 to open the account. But for the rate, the simplicity, and the balance cap, this is the one to beat right now. Next is a name most people already know. ING Savings Maximiser has been one of the most popular high-interest accounts in the country for years, and right now it's paying 5%. That rate kicked in on the 10th of February this year. But unlike Judo, earning that rate requires you to meet 3 conditions every single month. You need to deposit at least $1,000 from an external source to any personal ING account. You also need to make at least 5 card purchases that are settled and not at a pending status on your linked Orange Everyday account. And you need to grow your Savings Maximiser balance each month, excluding interest. If you miss any one of those in a given month, you earn the base rate, which is 0.01%, essentially nothing. Now, for a lot of people, those conditions aren't that hard. If your salary goes into ING and you use your card regularly, you're probably fine. But life happens. You forget to tap your card 5 times. You make a big withdrawal and your balance doesn't finish higher. You transfer money from one ING account to another and it doesn't count because it wasn't from an external source. Suddenly you've earned nothing for the month. The other thing to watch is the balance cap. The 5% only applies to the first $100,000. Anything above that earns 0.01%. So if you've got $150,000 saved, maybe you're building a house deposit, half your money is basically earning nothing. Compare that to Judo Bank, where the same $150,000 would earn 5.1% on the full amount. Over a year, that's a difference of thousands of dollars. ING is still a great account if you can reliably meet the conditions and your balance is under $100,000, but it's not the automatic top pick it used to be. The next one on this list is the one I'd actually recommend for most people, but it has one catch that almost nobody talks about. AMP Bank's Go Save account pays 4.6% with absolutely no conditions, no deposit requirements, no withdrawal restrictions, no balance growth hoops. No account growth requirements, deposit conditions, or withdrawal limits. That's straight from AMP own product page. And the balance cap is $500,000 at the full rate, which is the most generous on this list by a wide margin. After that, you still get 3.75% up to 5 million. There are no monthly fees, and the linked AMP Pack Go Everyday account is also free. Now, 4.6% is lower than Judo's 5.1 or ING's 5.0 on paper. But remember that ACCC finding 71% of people on bonus accounts aren't getting the bonus. If you're one of those people, you're earning close to zero, while someone on AMP's account is quietly earning 4.6% every single month without thinking about it. Let me put a number on it. Say you've got $50,000 saved. At 4.6%, that's $2,300 of interest in a year. At the 0.01% base rate you'd get from ING if you missed a condition, that same $50,000 earns you $5. The catch, AMP Bank Go is app only. There's no web banking. You download the AMP Bank Go app, open the accounts through the app and manage everything from your phone. If that doesn't bother you, this is one of the most stress-free ways to earn a competitive return in Australia right now. Now, if you're under 35, there's one more account worth a serious look. Westpac Life is paying up to 5.25% for customers aged 18 to 34. That's the highest ongoing rate on this list for that age group. But the conditions are heavy. You need to keep your balance above zero at all times, make at least one deposit each month, and finish the month with a higher balance than you started. On top of that, to get the full rate, you need to make 20 or more eligible debit card purchases from your linked Westpac Choice account every month. 20 purchases? Westpac actually increased that from 5 back in November last year, and it was widely criticized. That's basically forcing you to tap your card almost every day just to earn the bonus. If you're the kind of person who pays for everything on card anyway, it might work. But if you prefer to batch your shopping or use a credit card for points, this account becomes very hard to max out. And here's the other limitation. The top rate only applies to the first $30,000. Above that, the spend and save bonus drops off and you're looking at up to 4.5%. So it's a strong option for a younger saver with a smaller balance who's happy to use their Westpac card for everything. But for anyone else, the conditions are among the toughest in the market. Before we wrap up, there are two mistakes I see people make constantly that cost them hundreds of dollars a year, and the second one is the one almost everyone makes. The last account on the list is Ubank Save. If you're a brand new customer, Ubank is offering a welcome rate of 5.35% for your first 4 months. That's the highest rate on this list, full stop. And the conditions are simple. You need to hold a Ubank spend account and grow your combined balance across all save accounts by at least $1 each month. You can make withdrawals during the month, but your balance at the end of the month has to be higher than the start. After 4 months, the ongoing bonus rate drops to 4.6%, which matches AMP Go Save but with conditions attached. And to be a new customer, you can't have held any Ubank branded products in the previous 24 months. Ubank is owned by NAB, so your deposits are covered under NAB's banking license, which gives some people extra comfort. The balance cap is generous at up to $1 million, but the balance growth requirement proved controversial. NAB's own results showed Ubank lost around $400 million in deposits after introducing the change. So the 5.35% intro rate is excellent for parking money, short term while you figure out a longer term home for it. Just know that once those 4 months are up, you'll want to reassess. Now, those two mistakes I mentioned. The first is chasing the highest headline rate without checking the balance cap. If you've got $200,000 in ANG's Savings Maximiser, you're earning 5% on the first $100,000 and 0.01% on the rest. That second $100,000 is doing almost nothing. You'd be far better off splitting it, keep $100,000 in ING and move the rest to Judo Bank or AMP Go Save where the full balance earns a real rate. The second mistake, and this is the big one, is not checking whether you're actually meeting your bonus conditions each month. Most banks won't tell you until after the month is over. The ACC itself recommended that banks alert their customers if they are about to lose entitlements to their bonus interest, but that hasn't become standard practice yet. So set a reminder on the last day of every month, check your balance, check your transactions, make sure you haven't accidentally disqualified yourself. So here's what I'd actually do. If you want the highest rate with minimal effort, Judo Bank at 5.1% with one simple condition is the standout right now. If you want zero conditions and zero stress, AMP Go Save at 4.6% is hard to argue with. If you're under 35 and happy to tap your card 20 times a month, Westpac Life at 5.25% is worth considering on balances up to $30,000. If you're a new customer and want to park cash for a few months while you decide, Ubank's 5.35% welcome rate is the best short-term option. And if you've been with ING for years and you're already meeting the conditions comfortably, the Savings Maximiser at 5% is still a solid choice. Just watch that $100,000. Every account on this list is with a fully regulated bank, and your deposits are protected by the government guarantee up to $250,000 per institution. So spreading your money across 2 or 3 of these accounts is not just smart for rates, it's smart for protection too. If this helped you figure out where to put your savings, hit like and subscribe so you don't miss the next one. Drop a comment and let me know which account you're using, or if there's one you think should have made the list. And if you haven't checked whether you're actually earning your bonus rate, go do that tonight, you might be surprised. This is general information only, not personal financial advice. Please consider speaking with a licensed financial advisor before making any decisions.